live again and make sure it doesn't shut down. All right, everybody, welcome to the lumber word for Wednesday, August 23rd. Well, it messed me up. August 23rd, 2023. We're waiting for another guest, but Greg and I are going to kick this off. Matt Beamer will not be able to make it today, but
Matt's Matt's got bias trading today, Ash. That's gonna have to be, really exciting for him.
I wonder how you get out of something like that, or is that a mandatory type of deal?
Oh yeah, I think it's very mandatory.
Yeah, gotcha. Well, let's look at this. We wanted to go through. Here's what we're going to do. We're going to recap what we talked about last week. First of all, Greg, why don't you do an introduction? I feel like I did a terrible introduction to this show. And you're really, my wife is like, let Greg do the introduction sometimes because you say a lot and you're horrible at doing it. Love my wife, and she's probably right. Why don't you do an intro?
Ash, I think she's overly critical of you. I think you do a fantastic job. Hey, welcome everybody to This Week in Lumber. It's glad to have you here. I know we had an exciting show last week, and just as a recap, when Ashley pulled out the marry, date, or dump segment, we made a reference to the crazy hot index, and we had some viewers that were confused by, whoa, what were you talking about there? And for those that aren't familiar with it, I suggest that you Google on YouTube crazy hot index, and they'll give you a full rundown of what that is. But we've flipped that and turned it into the crazy hot index for lumber. So Ash, I don't know.
Let me get my tech support here, Greg.
Yeah. Let's see. What do we got?
Let me see if I can bring it back a little bit. Can you see that?
Oh boy. It's not that clear. I think Ash, we're gonna nix that. We're gonna have to come back to that some other time.
Okay. But maybe you could explain to them while we look over at it. You've got a matrix. We're on the axis on the left. It's crazy. The axis down below, it's hot. As you draw a line up through splitting them diagonally, you go into the no zone, the danger zone, and the fun zone. So on the bottom of the chart, you have a 1, which is the item is not that crazy, to a 10. Item is crazy. Hot, it's not very volatile. From a 1 to 10, it's very volatile. So if you're a 1 and a 1, pretty boring item. If you're a 10 and a 10, that's your fun zone. When your danger zone, that's your danger zone.
If you're a 10 and a 10, that's when it's just like a printing press, right?
Yep.
And you can't go wrong there. I want to talk about new home sales that came out today, Ash.
Let's talk about them. I'm just sending Matt a note, so go ahead, Greg, and bring up the new home sales.
New home sales were up 4.4% in July, which beat the consensus. They're up 31.5% from a year ago. I think this is a surprising number to people. Inventory fell, and prices are down. We're down 9% from a year ago in price. And I know you're gonna bring up some really interesting data in a minute that ties into this. But the two things that I want to say is, number one is new homes now make up 31% of all home sales, which compares with a historical average of about 10%, 11%. And clearly everyone is focused on mortgage rates and affordability. But I'd say one of the things that we can see happening clearly is that the prices of the homes are coming down, which is partially offsetting the affordability issue. And Ash, what do you think the other reason for the price of homes being lower is?
What do you think could you ask that again, Greg?
What do you think the other reason for the average price of new homes being down? size matters, Ashley.
Well, so
size
yeah,
matters.
look at talking to a couple different segments of the market, the big segments, Texas, the Southeast, some of the Northeast. If you look at the different trends in the takeout rate of different items, 2x4, 104, and 5/8 has stayed pretty steady. 2x4, 10 footers, which I thought would go up as you're building smaller houses, actually went down. And Greg, I'm going to use this as a time to bring Matt in real quick, okay? Layman.
Okay,
Matt,
great. Yeah.
everybody. Matt, we're bringing you in. Sorry about that. I wanted to make
Hello,
sure
everyone.
queued up. This is
Hey,
Matt
Matt.
Layman from Layman's Lumber
Welcome.
Guide. Glad to have him. Matt, everybody's been asking where you and I have been at, so I wanted to bring you in this week. And we were talking a little bit about new home sales and the reasons for different things. We were talking about how size matters. What I have seen as a trend, all of a sudden, if you're in the distribution, you can tell how many times people are asking you for 92 and 5/8 studs in the last 5 or 6 months, right? And it seems to be more and more. Again, today I had guys asking for that, people asking for that. I need to take my bias training and use my pronouns correctly here. So what we're noticing is in some markets, the housing footprint shrinking, right? The lots, I don't know about the lots, but the square footage is getting smaller. There's
an article in the journal today saying that depending on the market area, that the size of the homes being built is anywhere from 18 to 24% smaller.
And that's consistent with what we're hearing from the field, right? What we're seeing is shrinkage, especially in the Texas and the Atlanta market, and single story versus 2-story, 8-foot walls versus 9 and 10-foot walls. So we truly are getting back to what I would say is the real entry level home. Now the question is this a slippery slope, or are we sooner or later going to be living in garden sheds at $400,000, or where's the point where's the inflection point where the size stops and the price stops? Matt, any input to that?
Well, yeah. Apparently, what the industry thinks is overvalued and not unaffordable housing isn't correct, because home builders have seen the reason I think the price of the median price range of homes is down is for 2 reasons. One is buying down the rate from 7% to 5% is the same as cutting the price. It's giving back cash at the end of the deal. So the true selling price of the house has that built into it. So I would imagine that's factored into when you report what you actually sold the house for. You got to knock off the 2 points worth of interest rate. And the other is the median, if the price we're talking about is the median price range rather than average price range. I heard a good analogy yesterday. It says if you got 5 houses to sell, one's 100,000, 200,000, 300,000, 400,000, 500,000. You sell one of each of them, the median price range is 300,000. But the next month, if you only sell one of the bottom 3 houses, you don't sell any of the higher price houses, and the median price range drops just because you had the volume was in a lower price bracket. So if people are trending towards smaller homes and prices are lower, then I can see where the activity might be heavier in that lower end. And just because it's the medians at the lower end, it makes it look like the prices are actually down. So I'd be interested to know, apples to apples, what did a 2,000 square foot home in Atlanta in a subdivision last month sell for? What's it selling for now?
Yeah, good point, Matt. I guess I was talking to somebody last night about this, and he basically said, what other choice do entry-level buyers have, right? I mean, they're either going to buy these homes or they're going to rent, right? Because there's not a lot of existing homes out there selling. Greg alluded to that fact with how many new homes are making up the transactions, right? I mean, there's always existing homes on the market, but certainly a lot less than normal, and I guess it's affecting rents a little bit also. So you can either keep renting or pay up for one of these entry level homes, right? But the builders have responded and are building homes to try to meet that monthly payment, right? And Greg came in my office last night and we were talking about affordability. So I saw something out there yesterday in the Twitter sphere, or the X sphere now, about affordability is lower now or as low as it was in 2006. And Greg basically said, yes, but things are a lot different in 2006. Greg, could you jump in and kind of say what, it is concerning that affordability is as low as it was in 2006, but,
Yeah, but as you can see with the new home sales number right now, I mean, we're making the adjustment. The prices are falling. The existing home prices maybe aren't falling as much because there's less people are moving because they're trapped in that 2.75% interest, and they're not gonna move and trade up to go to a 7% interest rate, at least and not of any substantive number. So I think the biggest differences between I guess 07, 08, and now is that was a wild frenzy where it was very speculative in the purchasing, and it was financed by a lot, like the cash out. I think the number was between 04 and 07. It was like something like $3.5 trillion of cash out refinancing. People were using real estate equity as a piggy bank. The stat came out the other day that there's an all-time record high of homeowner equity in their homes. So that's a significant difference.
Makes so much sense, Greg. Like, I have a home equity line, right? But when I look at it, I see in the mail like, hey, you can borrow money on your home now for 8% interest. It's like, why would I do that? It's like it's right there. But good point that the people have done that. So not to get too wonky here, but the other thing, you came in and said something about the difference between the short-term rate and the long-term rate. Have you thought that one out yet? Maybe
No, I haven't. But I'll posit it right now. If I look historically, the difference between the 10-year yield and a 30-year mortgage is around 1.5%. You could see it as low as 1 to 0.5 to 1% when rates are falling, and maybe it pushes up to 2%. It's 3% right now. And what I'm noodling is that the result of the Fed, whereas prior, while they were doing quantitative easing, they were buying up residential mortgages and keeping that long rate pinned at a low level of like 2 3/4. Which, if you think about it, the 10-year, when that was like 1 1/4, and their mortgage were 2 3/4. Now you've got the 10-year at 4.2 and the 30-year at 7. Actually, I think it said as high as this morning, it's up at 7.5.
And
so I guess the good news that I see in that is that there's opportunity for compression of the mortgage rate, even with the 10-year rising.
Yeah, so that's much better than when you came into the office and were explaining it to me yesterday. Matt, I was a deer in the headlight, and I asked him to explain it to me like I was a black lab after he did that.
You had no
And so all I did was I went over, I patted his head, and I said, "Good boy," and left.
And I peed on the floor.
Kick him a bowl of water. I'll be back.
Matt, what are you seeing out there with your crew, with your group, your followers on what they're talking about with inventory? I was on a call yesterday, and all I can tell you is everybody is optimistic, but not building much of an inventory from what I can tell. We had a little bit of a build. How did Beamer say he put it? I'm I'm very
He's really busy, but not investing in the future.
yeah, that's exactly it. So as a distributor, if you have something and you can move it within 48, 72 hours, you're getting orders, right? Talked to a mill today, and he said, yeah, the stuff we sold trucks on 2 days ago, people are calling me on. You know,
I think we got to give credit to the industry for getting smarter. And people right now are looking at, let's say between now and the end of the year, anybody that's paying attention knows what to expect out of the lumber market. They know to expect a rally in September, a sell-off in October, a bottom 1st of November, and strength into the end of the year. So I think what people are saying is they're bullish short term, but they're not certain. They don't want to build inventory and I think that's because they know that October is going to be a sell-off month, and it's just part of the cycle. But buying now to cover through the first week of November completely takes all that September rally out of play for you. So that's my advice has been from the beginning of August to be third and fourth weeks of August to be building inventory to cover through October, first week of November, so you'd be ready to buy again in late October. But I just really think people are talking more, social media, get on YouTube. If you think you want to learn about lumber, there's all kinds of people on YouTube showing you charts and pictures of Home Depot in the background and little pieces of 2x4s. And
what does somebody have to pay for something like that, Matt?
For YouTube?
Yeah. Do you have to pay for that?
No.
Oh, you mean it's free? Yeah. So people can learn for free. Okay. So maybe we're saying is you get what you pay for. I guess one of my questions, Matt, is one of the things Ashley and I look a lot at is relative value. We've got an extensive database where we analyze all the different producing regions and all the items within it. We compare them to each other. We compare everything, obviously, to Western spruce 2x4s, and now Eastern spruce 2x4s delivered Chicago. But one of the phenomena that I see is in the first part of the year, yellow pine is trading at relatively high numbers compared to spruce. And I just looked today and went, oh my gosh, this stuff is, I I looked at 6 and 8 inch and I said, what is the cost of the fiber? How far are we from the cost of fiber at these current mill prices in yellow pine?
Yeah, Matt, that's one thing we are weak on talking about that, where you're really, really strong in that. What are you seeing in pine? What's your feeling out there?
The pine guys are still making money. The break evens is about 350.
Okay.
But isn't like 6, 8, and 10 inch, other than on the west side, the mill net right now has to be below that with, given that, depending on what their profile is, how much 2 and better, number 3 and number 4.
It's about
your mill netting $300, that assuming that you're not selling at big discounts to print.
Yeah, this week and last week are the first times all year long that I've heard about Southern pine mills losing money, and that being a concern. So we just this last, we've been teetering for a while, but this last little bit of sell off here, pushed them by. But the thing is, I don't know that means anything. I don't know that it means that, okay, so you're at break even. We know in Canada at break even doesn't mean anything other than you're within $100 from the bottom.
Well, there's a difference between break even and shutdown cost, right?
Right. Absolutely.
And that's the one thing that when, Matt knows it, it, Greg, when people talk about break even, we're like, okay, you're at break even. But where's the pain cost at, right?
Because everybody can lose money for a little while, but nobody can lose money forever.
Yeah, but it's a good point. And I know it's inexpensive. I don't like to say the word cheap when Greg comes in and says after a year, hey, Southern Pine's looking a little bit inexpensive here.
Yeah, cheap's a good word.
Yeah.
4-inch is it's interesting. Pine has gotten to be where 2x4s trade almost in a different. It's almost like a separate market from 6-inch and wider, and boards and timbers and decking, and I think a lot of that has to do. And I've heard people say this, that people are swapping MSR Southern Pine for 2 and better spruce. Well, they're not. That's not the same product. People, you can't build the same truss out of a number 2 spruce as you can build out of a number 2 pines. It's got
Well,
more
yeah.
strength, especially MSR. So that I think that more people are using the pine because it's just more of it available. Yeah, it's just
Yeah, absolutely. I think it's a question of availability and relative price also.
yeah,
Sure.
because you can ship the stuff to you can almost ship pine all the way to Canada and be delivered the same price as the RFOB mill in Canada. So it means it's being $100 cheaper, you can cover a lot of ground. But I think a lot of the guys that I've talked to is just nobody wants to have any extra SKUs in their inventory. So that I've seen this on the contractor yard side too, as well, with people that will say, well, I'll do some inventory swapping. I'll switch spruce for hem fir, dry hem fir, or greener back and forth. And I think that less and less people are doing that. And they're willing to pay up not to have the double inventory.
Yeah, that's a good point, Matt. I think one of the things, I was on a call yesterday with a group, and one of the things I'm hearing, and it may just be me, and I'm hearing it from small people, I'm hearing it from larger people, they're really seriously looking at pulling back on their contracts for next year for sure, and especially in Q4. And what that's going to be is if you're a mill salesperson or trader, you're going to have more open market wood to sell. It's not just going to go away when you walk in every day, 50% of it based on some kind of price that's that nobody's even certain what it is, right? There's going to have to be more price discovery. At least that's what I'm hearing. Is that am I wrong on that?
That's a wholesaler's dream come true.
Well, it's certainly a distributor / wholesaler's dream come true, and it may be happening.
Yeah, and it makes sense. I thought we were going to have that at the first of the year when Lowe's and Home Depot didn't take all their OSB contracts they were going to, but apparently they still had a string on it. They could come get them later.
Now, when I say that, the big boxes like that, they're always going to take it off of from what I see, off of a number, a formula, because they just physically don't have the manpower to buy spot lumber every day, right? They need to have intake. They need to have their contracts and all that. So this is a great segue to going into our marry, date, and break up segment, Matt. So what we do is we talk about, you can pick different items that you want to either marry, you want to break up with, or you want to just date. And last week we talked about a couple of them. So I prepared for it. I can go first if y'all want me to do that.
And, is this like CNBC's stock picks? Are you gonna?
Well, I'm not going to take
trade it or dump it.
Yeah, I don't have a bunch of buttons to push and yell like Kramer does. But so dating, even though the price is high, I want to date 2x4 92 and 5/8. They seem to be the one that's getting in the club and getting bottle service and everybody's looking for and wants to be with right now. And I think that it's still only 11 a.m. in the club that's open till 3, and that's still going to be working. I want to marry 2x6 number 3 Southern Yellow Pine. I heard that it traded as below 200 this week, mill, in the 180s. If for volume, where mills wanted to make it go away, but and it had to have destos on it. So if I can find that person or look that person up on 2x6 number 3, I think that's somebody I want to marry for a while. Break up with 2x4 and 2x6 10-footers in dimension, in studs, in number 2 and better, in all species. That's kind of what I want to break up with. I see the size of homes still trending a little bit lower. I see a bunch of mill lists with that loaded up on it, and I'm not that interested in it. So those are my 3.
All right. I am still dating MSR spruce we're deep in our relationship right now, but we're having fun. We're over there in the fun zone. We've got good liquidity. We are a good value item seasonally between now and mid-October, strongest time of the year for MSR spruce. I'm married right now to European 2x4 16s. That's what I am married to. This was an item that was absolutely glutted the market. There's been a serious pullback in it. I see a big void. I think you're going to be seeing delivered prices on this item with a 6 handle very, very soon, if not like already. I'm still, Ash, I'm with you. I'm still dumping 2x6 9s, 2x6 10s, and spruce on the curb. These are things that have been relatively overvalued for a long, long time, and they have to come back into a bit more normalized relationship. I think they've been selling. They held with the high $600s and $700 delivered forever, and I think you're going to see them be more likely in the mid-low 5s before it's all said and done.
Yeah, and just so everybody knows, you can put plywood and OSB in there. That's just something I don't follow because I don't understand the pricing model of it or how people do it. So, Matt, what about you? What's your thought on here?
Yeah, don't hang me with plywood and OSB. I definitely plywood's a crazy thing. It can be going 100 miles an hour in different direction than everything else, and the guys that are buying it just, I guess it makes sense, but I don't get it.
Yeah,
not a lot of price transparency on those items.
Yeah, and that's the biggest problem with trading plywood is there's so few letterheads. You got to be in the pocket of one of half a dozen people, or you're not going to get it. But and it's kind of the same with OSB. But
I love with OSB is you'll have an unchanged print for 2 months, yet there's 50 and 100 truck blocks going out the back door at big discounts.
Yeah, that's it's crooked. It's just it's one of those things in the lumber business. You want to shine a light on it, but you're afraid if you do, then you'll get your flashlight taken away. You won't get any more. But as far as dating anything, I'm at a place right now where I mean all my stuff's about timing, and I think that last week and this week is the time to be buying whatever your top SKU items are. I think the transition from and something here in North Carolina, 93-inch studs are what a lot of you don't see 93s using in a lot of the country, but short trim 8-footers are I think are going to replace the 9-foot frenzy just because making smaller houses. I mean, it's just the demand is there, and the guys that are talking about making smaller houses in big volumes, it's a big shift. I mean, those guys, Greg had made a remark or reference to a percentage of size, and one of the major builders told me that they've gone from 3,600 square feet average down to 2,200 square feet.
That's huge.
That's huge. It's 30% at least.
Yeah.
But their prices aren't changing. They say they got a subdivision in, this was the guy in Nashville was telling me this, subdivision with $850,000 homes in them, 3,500 square feet. You got the exact same subdivision going in across the street, same model of houses. They're just smaller. They look the same, but they're just smaller, and they're still keeping the price at $800,000.
Okay, so housing starts at 1.3-ish, 1.35. I'll ask this to Matt and Greg. If this trend continues, we're using less lumber, correct?
Well, you got Home Depot and Lowe's talking about DIYs off, so you kind of nix that out because you're using the credit card like you're talking about, so that's just not a good thing. So
right,
but home improvement's going to probably still be good.
Well, it has to be. It has to be to keep using this.
Well, it will be because it's like everybody hell, I'm doing this. I'm in a house that's 50 years old and we just remodeled it.
Yeah, no doubt. So did we. We just did it too.
And I just went out and spent $6,000 on an air conditioning unit for an outbuilding and closing in my carport. I'm still spending money, and I'm not buying a house. I'm not moving, but I'm still spending.
I know Greg had a good point the other day. He said, hey, the market finds a way to adjust to what the current demand is pretty quickly. So will demand going into Q4 for lumber be the same as it is now?
And this, I go back to what you just said at the beginning, that
demand falls seasonally in the fourth quarter anyhow, because there's less hours of daylight. You can only nail up for so much.
Yeah, you got a lot of big holidays.
Right. The reason why you have seasonal low in lumber in the fourth quarter is it's the best producing quarter of the year, and it's slower consumption. So
yeah, which makes it a great time.
I mean,
yeah,
I think the best you can expect from the demand side is it's going to stay steady at the levels that it's at, albeit with the seasonal adjustments. And, I was of this viewpoint that North American lumber is pretty close to equilibrium. So it's really the inventory accumulation distribution that has a bigger effect at prices right now, with an overlay of, certain items that are overproduced relative to demand and items that are underproduced now relative to demand that will have those relationships go out of whack. I mean, it's why our database on relative value is so valuable. And, really that's our secret sauce.
Well, it's fun. I was telling a person last night, they're like, what do you guys do that's different? I'm like, well, one thing we see is that Matt said it's going to be good for distributors and wholesale distributors, but you're going to have to take risk. And when you take risk, you're going to have to take an educated risk. you're going to have to be really disciplined. And if you're disciplined and don't get too far over your skis, you'll get rewarded for it. But you can't have an empty basket to sell out of either, right? As a distributor.
Yeah.
I mean, Layman, one of the things that I keep thinking about is, kind of to Matt's point of, hey, everybody's going to stay close to the vest. We had an input from Beamer. Hey, I'm really busy, but I'm not investing in the future. We know that the big pro yards are not going to build any excess inventory. They're going to keep their inventory dollars in line. I mean, I throw all those things in. What could be different in the fourth quarter would be, hey, what happens if all of a sudden rates backed up and sales got a little bit better? That's one of the things that no one is expecting.
Nobody expects that.
So the pro dealers like that they're broadcasting what their intentions are. Their intentions are to keep a lean inventory, which means that in any positive thing from the housing side, the market is going to be already underbought for it. It's at this point, it's underbought for any kind of increase. And if you start getting some curtailments in the South, or like over the holiday stuff, anything that creates an imbalance, I think there's the surprise for everyone is going to be that I honestly believe that we're already underproduced, because we haven't seen what real demand looks like we've been in like a liquidation or accumulation mode all year long. We haven't really, we kind of just been chasing because we got a late start on building inventories for the spring. So instead of building prior to the demand time, we built during the demand time. And I think we're just now shaking that off and getting back to the point where people are going to start behaving normally, or what they used to do, which I think it's going to be a lot stronger September, and a weak October, and a good place to buy in November. And it's going to feel more like it's normal, but with inventories level where they are at the low levels that they are, I think there's more of a surprise to the upside than there is to the downside after October.
Hey, Matt, I gotta run, Ash. Hey, great to have you on here today, Matt. Appreciate your input. Ash and I were talking Next week we're gonna have our Don Rumsfeld segment. We're gonna talk about known knowns, known unknowns, and unknown unknowns. So we want everyone to tune in for that exciting segment.
Matt, just real quick, why don't you give a little bit of a segue into how people can come and look at your information, which is valuable, what you put out. I mean, there aren't a lot of options out there to look at lumber pricing and feedback, but Matt really provides a great platform for that and has been doing it for a long time. So Matt, I see your laymansguide.com is up there, /scouting report. How do they
you can just laymansguide.com. There's some places, there's all kinds of buttons to hit to get a 2-month free trial subscription. And so that's, I don't want to self-promote, but just laymansguide.com if you just want to look.
And what I did want to say is we have begun to accumulate certain inventory items, but we don't want to tell them out loud out here. If somebody wants to find out what we are accumulating and what we think some other people are, they can send us a note. It's ashley@sitkainc.com. That's SITKAINC.com, or Gregg@sitkainc.com. We'd be glad to tell you.
Not at Sitka Inc.
Yeah, we feel it's too valuable information to give out here for free. So if you want to give us a call, that would be great. Also, fellas, thank you so much.
There's Ash, nice nag there. All right, guys. Hey, listen, thanks very much.
Thank you.
Cheers.
Hey, Ash, your background is backwards.
I got to turn the